So for the purpose of the recording, we'll just go over that again. The Bank of England raised rates less than some had anticipated, less hawkish than anticipated. We've got that initial sell-off, but within the weekly template, we have 3 days of breakout traders to the downside, shorts in the market. Okay, so Monday was up high. We broke those highs on Tuesdays. Those lows on Tuesday with that breakout of the inside day. So we've got shorts in the market, and then again on Wednesday we broke the lows. We've got more shorts in the market. Then on Thursday, today, we've got more shorts in the market, right? And so all of these traders are in the money, and the market doesn't let you stay in the money for long. So the theory is the power of three. We're looking for a correction into the shorts. How far that can go, I couldn't say, but for a day trade, I'm looking to move into London. So I can bring up this indicator which shows London's range. That slide in London and a break of the trend, which we've seen. We've got a break in structure. Yeah, I've got a powerful fan going. That's what you can hear. It's the fan on the computer. So we've had a break in structure, and I'm looking for a deep fill low down in today's range at the lows, the low of the month, the low of the week, for a nice 5 return on my investment. 5 times my money, to take me into low-hanging fruit, where I believe there'll be stops and even a continuation up to last week's highs, leaving some money on the table to see if we can't move up into Wednesday's US range and those lows as a target for more stops slightly above last week's highs. Okay, so moving on to gold. Gold, I'm looking for a long, represented by this arrow and position measurement. So far we are coming down. So this could be the sell-off into the low of the week, low of the month, low of month, low of week. Again, same scenario. We've got 3 days of shorts in the market. So I'll take away. So we've got breakout traders breaking Monday's low, breaking Tuesday's low, and we're breaking Wednesday's low. So we've got 3 days of shorts in the market, and that could be the fuel for a short squeeze. Currently we're selling off, and that's fine. What I'm waiting for is structure, bullish structures to start building and to play into the thesis for a longing opportunity. If not, standing back, sitting on my hands, letting the market do what it wants to do. From a longer term perspective, we're coming into what might be regarded as a significant demand area. This here, this range, this candle to that candle there, was the catalyst for the breakout. So you'd expect this to be an area of demand. Okay, any questions so far? And in anticipation of a deceleration of this sell-off, I'd be looking for longs to ride it up into these shorts. And remember, we've got non-farm payrolls tomorrow, so you'd be in anticipation of those that are in the money selling gold, selling cable, that they want to square their positions before tomorrow's event. We've also got a number of other red news on the calendar. So in fact, coming up, we've got US jobs data coming up in the next couple of minutes. Price targets for gold. Well, if you can't see the screen, it's difficult to. I can send a snapshot. Let me. So we're making a new low for the month currently. In terms of levels where this could head to, I'll have to give me a sec and look at this. So it's here, down, that's the high, that's the low, the midpoint stops below here. So 24, 1924 on the downside could prove to be a tough area to get below. And 29.27 push. One, two. This is the third push into the low of the month. Perhaps we're going to peter out here at some point soon. Potentially, break of structure is needed above 38 on the 4-hour time frame to really convince. Lower time frames $39 on the upside. So 39 on the upside, 29 on the downside. That appears to be the consolidated range so far for today. And the low, the 1929 support ties up with 4-hour structure back on the 23rd of July. I'll have to send a screenshot here up this chart. Okay, so I think that should be clear enough. Maybe that one's better. I'll try that. I'm not sure if that's helpful. But as I said, I'm looking for this dump to bottom out and start turning higher into shorts. And if that doesn't play out, then I'm not chasing the sell into a bunch of support and demand area. That's not to say that it can't just fall away, but it's a less probable scenario. That being said, we're on the backside of that bullish trend, so anything is possible. But I'm biased bullish. Okay, great. Um, so that's gold covered. The jobs data is trickling out. Also got Fed's barking. He came out and spoke. He said slowing in the economy is inevitable and on the horizon. Okay, Euro yen. Euro yen worked out well. We talked about the sell off, which is still underway. We talked about that yesterday, and also at the end of the day's watchlist creation, looking for the run into 156, which is what we're seeing. So that worked out well. Um, Now, having said that, we have 155.60 on the downside as a target. But I'd be cautious chasing anything lower because I've been in anticipation of a correction up into the weeks. Where are we? That's better. Okay, so we've had the three-day cycle. We've got a lot of room to go to the downside if we do break the lows of this consolidation. So to get onto the chart. $155.10. Now if we measure highs to lows of this correction, we've got 155.80 as a target, and then 155.66, which tallies up with the 155.60 support area or thereabouts. Now, having said that, if we get into this area, there is still a fair bit of room down into this order block. So I'll mark that up as well. $155.30. So those are the downside targets, and they would be looking to protect a waterfall sell-off to clean up all of this down into here. Okay, Euro Swiss. Just checking. Okay, Euro Swiss. Euro Swiss was a breakout. We talked about this yesterday. We were looking for this ascending triangle breakout to occur. It took a while, but we got the move lower. And we've got sell stops at the low of the week, which could be targeted if this were to continue. No reason why it can't. This is day 2 of a 3-day cycle, so often So what we've had here is we had a failure at last week's highs. We broke this week's highs, the initial balance highs. So we broke out to the upside, but we failed and we came back in. So the thesis is now, well, therefore, we're heading lower. If we can't maintain that bid above the week's highs, this week's highs, we failed at last week's highs. We've broken structure on the inside of this week's range. Right, so we've broken to the downside. We broke Wednesday's lows after coming back up into these shorts, picking up the money to fuel a continuation to the downside. So I'm looking for opportunities to short Euro Swiss for a continuation, targeting the low of the week, sell stops below, and potentially even down to last week's lows, which is also last month's lows. Okay, so to complete the range, if you pull that out on a daily basis, then we're completing that range. And in fact, you can argue that we're heading much lower on a swing basis into potential demand area low down. $94.50 on the radar. Pull this out to a weekly. We're in a strong weekly downtrend, and no reason why it can't continue. Okay, so that's Euro Swiss, Dollar Swiss. Dollar Swiss, right. Dollar Swiss is not behaving as it should, or as I anticipated. You've got this M formation, and the correction is underway, and the target is right up into last month's lows to meet with the neckline. It's a high volume area. It's heavily displaced, and you've been in anticipation of a move up on a weekly basis into the neckline. Or at least, let me go back, at least to test these prior lows. And we're not there yet. So we'll mark that up between there and there. Okay, it's a target area initially, and then beyond that, higher up into the neckline of the M formation. So if we come right back into where we're at, this is the opening range for the week, and we've not done a very good job of breaking out of that. We've come back inside, which would indicate that we're not ready to move there yet. We may be picking up more fuel for a stronger move up. So for me at the moment, there's nothing to do with Dollar Swiss. If anything, it's actually short. It's a meanwhile short, and we'll have to put the weekly target on ice. As we'll breaking structure to the downside. Come back up into the peak formation. This is an engulfment on the hourly, testing last week's highs. So we're trapping volume up top and potentially moving lower into shorts that were built up, longs that were built up over the course of this week, and we're reversing the outlook for a move lower. So for me, it's a mixed picture, and I'm not dealing with Euro Swiss, Dollar Swiss rather. Euro dollar. Let's clean up the chart. So we're sitting below last week's lows. We failed on the downside, and we're moving back up into shorts. So we're breaking out to the upside, and there are prospects of a move into this week's shorts. We failed at the highs. We've got 1, 2, 3, or we've got 1, 2, 3, 3 days worth of shorts in the market for a short squeeze that seems to be underway. We're breaking structure. We've got an imbalance to move back in, potentially to fuel and move higher. So long from in here to go up into stops above. So you've got the London low as a potential resistance. The Wall Street open, those highs. You've got price and balance up here. You can measure the downtrend with the volume profile. You look for confirmations for where the market might reach into. So that downtrend, you can see we've got the highest volume was all traded in here. Through here, we've got a potentially easy move up into resistance. I've essentially marked it pretty much correctly. Target 70s, 75, thereabouts, and anticipated resistance in here. Okay, so 15-minute candle rotation. We've got this W formation. So the origin of that displacement and break of structure came from within this candle. So looking for a move back in to the neckline for a move up. So there's euro dollar on the radar as well. Okay, anything else, guys? We've got the indices we can look at in a moment. Sterling yen, I talked about this yesterday. Sterling yen was a lovely trade for those in London, and we're looking for the continuation in New York. The thesis here, which we talked about yesterday in the morning and then at the end of the day for what's happened, and these are old drawings, so as you can see it's pretty much very accurate. We're looking for the move up in Asia to come down in London, and that's essentially what's happened. We were looking at this being a first red day, so a first red day, well, let me take off all the drawings together. So as you can see, we had a series of positive days. So Friday closed up, Monday closed up, Tuesday closed up, and Wednesday closed down. So when you've got that scenario, you've got bears in the market. So what you're looking for is a move into volume. So you've got the volume here, a move up into volume, which we had, and then the break of structure, which we got, and a continuation and a dump. So that was a template, a textbook setup for a short, whether you were in London or Asia. Selling high in Asia, selling high up in London, and catching that breakout to the downside. Yesterday being the trigger day, telling you that bears are moving in to all of that length, low-hanging fruit to sell into. So same scenario for today, really. Maybe the correction up to short. So it looks like we're getting that correction up as we talk about, as we analyze this. So we've got high of the day here. We've got that W formation being put in. So we've got the peak, potential peak formation. Yeah. And we're moving up into that potential resistance area. Come down into a lower chart. Okay, I'll do the US 30 in a moment. So this was the breaking structure. We haven't had any engulfment to signal the continuation of that London trend yet. So we're moving back into the peak formation. So at this point, you can start building your criteria for a short. So we need to see the market back on the other side of this bullish phase. We're coming up into the peak formation, anticipating that we're going to have resistance. And we're going to look for a break of structure to the downside for prospects of a move lower. So we need all this to build. It's still fairly early on in the open in terms of currencies, but biased short. For sterling yen, and you can look left for levels of support, potential support. I think 180, the figure, is a reasonable target. We're testing this area here currently. It's acting as support. We have a fast move into 180. And then, of course, the other scenario is that we are finding support here. This is the low, and in that respect, we've got the shorts on the day to move into, and then the peak formation thesis is on the downside for a move up. So looking to the US 30, start out a bit further out with this. Okay, so we are testing support on a daily basis. That candle in here. We are breaking trendline resistance support, but we're yet to convincingly break this structure. So I'll put that in the So that is the daily chart. We need to get below 35234. On the 4-hour chart, we can see that we are in the cusp of doing so, being the front side of that trend. Moving up into the resistance again, which might be the fuel for the sell-off. That's the 4-hour chart. On an hourly basis, we're creeping up into the dump and monitoring for the sell-off. from the trend line resistance. And in this scenario, for a near-term target, I'm drawing the Fibonacci on the correction. I like to often see this minus 272 respected. For a near-term target on the day. The resistance is where we're at the moment. We've come up into resistance. The highs, let me draw it. $35,294 resistance. Okay, so if there aren't any more questions, we'll call it a day. I want to go and have a look at the market to see what developments have been made. Is gold moving up? Trying to. You're welcome. Thank you, I am. Euro-dollar's coming towards that support area. Sterling yen. Looks like it's going to make its move. What else do we look at? Cable. Well, there's the bounce that we talked about. Nicely in the money on that trade. Didn't get triggered. But there's the secondary confirmation for a buy limit in the nose of the W formation, potentially. Okay, guys, I think we'll call it a day there then. So hopefully you got some value out of that, and you're seeing how I'm tracking the days, the build up of shorts and longs. You know, to target basically to target whatever is looking like it's more overdone, and you can do that on a 3-day basis. You can have 3 sessions of drop, and therefore look for the correction. So Asia, London, New York to buy back the shorts that came from Asia, and vice versa. You can do it over sessions, you can do it over days, you can do it over weeks. If you get 3 weeks of breakout longs, then the path of least resistance is likely a correction to the downside. So it's about positioning yourself within that move at an optimal area, based on market structure, price action, and so on. So hopefully you're getting value out of these videos. Some feedback would be great. I'm going to try and work on this sound scenario and why some people are seeing the dots and others are not seeing the screen. It's all quite strange. It started off very well, so I don't know what issues we're getting. I might need to speak to Discord on it, but anyway, let's see what we can resolve. But I'm recording these, and I'm going to send this one out there now. It should be there within, or however long it takes to upload, really. Maybe within 10 minutes, fingers crossed. Okay, good luck out there. Really enjoying this video. It's a big help in understanding how to analyze. Okay, that's fantastic. Okay, and in the education section, you'll see uh, a fair bit of what I've covered today in videos that have been drip fed. And the next, well, my homework for this weekend will be education on these 3-day, 3-week, 3-session cycles. Okay, cheers, guys. Have a nice day.